An LLC protects you, but it doesn't save you taxes. An S-Corp can, but only when you're truly ready. Today, we'll identify when it's the right time to switch.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Okay, so I know we've talked a little bit about S corporations before, but I wanted to really dig into an LLC versus an S corporation and kind of when your LLC is ready to go to that next step.
Ooh, all right. Okay.
So the natural kind of chain of events is you start a business, and that's going to be called a sole proprietorship. So you are just going out into the world, earning some money with the intention of getting a profit. And then once you decide you're really in this and you want to finalize your business name, because you can get a DBA under your name, but a lot of times that only protects the name in the county, and it still allows somebody else to take that name on the state level.
Gotcha. Okay.
So especially if you're really into your branding, or you're just ready to say like, okay, this is a real business and I want to kind of further my intent that I'm serious about this business, then you file paperwork with the state, and that's where the LLC comes into play.
Okay.
So limited liability company.
And why do people usually, is it just for the name? Like, why do people like to do the LLC format? Like, what is that all about?
Well, I mean, there's definitely a bunch of different reasons. So a lot of it, we have to remember that this is something that is provided by the state in particular.
Oh, okay.
And then there's going to be, in a lot of cases, some legal reasoning behind it, because the LLC structure in that state has been challenged. So there's certain case law that would be able to protect your business if certain things happen. There's also that limited liability aspect. There's still ways for them to kind of pierce that corporate veil or kind of come after you because you were the responsible party for the business. But it does give you a little bit of liability protection. So,
so it's more of a legal thing versus a tax thing. Okay.
Exactly. So with the IRS, because the state did that, so the IRS doesn't necessarily care. They are treating a sole proprietorship and a single member LLC as exactly the same thing. So there are no tax benefits to creating an LLC. Just
interesting.
Right off the bat.
Okay.
Because it's going to be treated exactly like it was before. The only thing might be is that you are creating a larger intent.
Okay.
That you are actually running a business versus a hobby or something like that. But other than that intent side, it really is going to be treated exactly the same in taxes as if you didn't have that LLC structure.
Interesting. Okay. So let's say you're at the point you're doing that LLC, you filed it all with the state, and you're making decent money. Is there like a magic profit amount or a magic number that you get to know okay, maybe I need to start looking at some maybe different tax classifications like the S-Corp?
I mean, it gets a little bit tricky. There are certain aspects that are only available on that single member LLC level. So it benefits you if you have a spouse and your spouse is working in the business, or you have children and they're working in the business. So there are reasons why you would want to stay as a single member LLC and not be converted over into an S corporation. So said, if you have a spouse, they're working in the business, and you have really high medical needs, that might be something in the favor of staying a single member LLC.
Gotcha.
So you really want to look at, again, what is your lifestyle? What are you trying to support with this business? And then are there any tax strategies that would be able to benefit you in that way? So if we've kind of exhausted all of the benefits of the single member LLC, or we don't need some of those benefits because of the way that your life is structured and your goals, then we can start considering an S corporation. And the S corporation gets really, really tricky because we have the idea of reasonable compensation that kind of comes into play. Because a single member LLC, it treats the profit 100% as your payment for services performed.
Oh, okay.
So payment for services performed are going to be subject to Social Security and Medicare.
Okay.
So 100% of that profit, you're going to get charged Social Security and Medicare. When we convert over to the S corporation, then we're really identifying what is the actual cost and value of your services.
Okay.
And that portion is going to be subject to Social Security and Medicare. And then anything in addition is really more like investment income.
Okay.
So we need to make sure that the value that you're providing the business and the profit, there's a little bit of a gap there.
Gotcha.
Because if the profit is at equal to or below your value, then again, the S corporation and this, and treatment like a single member LLC isn't going to make a difference because you're going to get to the same exact place. So normally I say if you are making six figures, that's going to be one of the flags, because if you're making six figures, then you should be investing in proper accounting and taxes and things like that. And then we're also looking at what is the profit of the company, because it's that profit that really is the deciding factor.
Okay.
So like I said, there are certain businesses, maybe they make $500,000, but they have no profit at all. So in those situations, it wouldn't really benefit you to do the conversion over to the S corporation.
Okay.
So when you have, I say, a profit that is generally around kind of the average salary across the nation, which would be in that $50,000 to $80,000 range.
Okay.
Once you have profit in that range, that's when we're going to start really considering, are we going to make that election for the S corporation?
Okay.
And again, you're still going to have an LLC, because that's what the state is doing.
Okay.
What you're doing is the IRS, based on it being an LLC, they're going to automatically tax it like a sole proprietorship. So you're going to file paperwork with the IRS that says, hey, I'd actually like to be taxed as a different type of entity.
Gotcha.
And that happens to be an S corporation. So once that paperwork is filed, then the IRS changes the way that they are reviewing your company, but that doesn't change your status with the state.
Okay. So they're very still separate. They talk to each other, but they're separate. So, okay. Okay, cool.
And some of the states, once you file the paperwork with the IRS, they'll automatically conform with the IRS.
Okay.
But not every state does that. So there's certain states where you have to file the paperwork to request to be treated like an S corporation with both the IRS and the state.
Okay.
So New York is a big one that you would need to do that. So just kind of keeping in mind that there is that separation between the federal government and the state government, and they do have different rules, and they are going to do things differently. And that's really where we have sometimes that confusion between, I have an LLC, but do I have an S corporation now? What am I supposed to be called?
Yeah.
And so I say it's kind of like being someone's sister and cousin. You are still the exact same person, but depending on who you're talking to, they're going to call you something different, and they're going to treat you a little bit differently.
That's a really good analogy. Yeah, I like that. That actually is very good.
Yeah.
Okay, cool.
Yeah. So like I said, whether you have an LLC, an LLC doesn't kind of naturally give you any tax incentives, but it does allow you to move to that next step of the S corporation, because the S corporation is going to require that you have a business. So either an LLC or a corporation on the state level. And those can be converted into an S corporation on the federal level.
Okay.
And like I said, we're looking for is the gross income of the company over six figures. And then also, what is your profit?
Okay.
And even if it's something that we have a few different people where we just kind of keep an eye on them.
Yeah.
And
Yeah.
say, okay, let's kind of figure out when we want to pull this trigger, when's the best time. Because if you become an S corporation too early, then you have all of these administrative costs
Gotcha.
that, negate any benefits that you have with the S corporation. So once you have an S corporation, you have to have financials. So that means you have to be preparing a profit and loss and a balance sheet. You can't just give somebody a list of your income and expenses. So that's going to take a little bit of time. You have to have payroll. So you're going to have to pay for a payroll processor or pay for someone to manually do your payroll. You're going to have to pay for another tax return. So you have that kind of coming into play. So the costs can really add up very, very quickly. So it's just making sure that you're not doing that before you actually need to, because again, I tell people all the time, if I can get to the same answer and do half the work, let's do that. That is going to be my ideal scenario.
Okay, cool.
But that's really where, an S corporation can be cost prohibitive, especially in those initial stages. But once you're ready for it, then we can start kind of having those conversations and seeing what's going on. But it's hard to say exactly when you'll hit that situation because every industry is going to be a little bit different. Everything that you do, slightly different. You can have people that are still in a service industry, but one person travels a lot. So they don't have as much profit because they're traveling across the world and they're having to pay for all of these things, So it really depends on your specific situation. But just kind of remembering, yes, you can create an LLC as you're going. And sometimes, I like to do it anyways, especially if you know that this is going to be, this is going to be my source of income and I need to make at least $150,000 in order to survive. After a certain point in time, you are going to get to the point where you have to have an S corporation in order to maximize your benefits. And when you create the LLC is a brand new entity. So that means you have to get a brand new bank account. You have to get brand new business accounts. You have to get brand new everything. So sometimes I recommend to certain clients, let's just create it now. And maybe you'll just have an LLC and we'll treat it like a sole proprietor for the first year or so. But that's just because by the time your business blows up and we get to the point where you need to have an S corporation, and that's going to be my recommendation, you're not going to have time to open up a new PayPal account, open up a new Venmo account, open up a new Stripe account, open up a new business account. It's just not going to be there, So let's get all of that done now. And then you have the setup, everything's in place. And then once you're ready, we can start to have those conversations, convert that same business over to an S corporation. And then really at that point in time, all we're doing is maybe turning on payroll, or we are, sometimes adding in the QuickBooks account and the, accounting and bookkeeping services, depending on
doing all the record keeping and stuff. So I know that I see a lot about make your business into an S-Corp. It's kind of everywhere online and social media and whatnot. And so sometimes I'm curious of what about the people who may have converted a little too early? Because you've already talked about there are more costs. You have to have a whole separate business return and different things like that. If you've done it, are you kind of stuck there forever for the most part? Yeah. Okay. Yeah. All right.
Yep. So it is possible to remove your S election. But when you remove it, you can't request to be an S corporation again for another 3 years.
Gotcha.
So in that time frame, you may have needed to convert to an S corporation. So it actually costed you more by revoking it and then filing as a sole proprietorship for 3 years versus if you had just paid those costs for that 3-year period.
Okay.
So that's also where we have to kind of take a look at things.
Okay. No, that makes sense. Of just like, are you going to continue doing business and is that the goal? Gotcha. Yeah. Okay. So like we kind of ask it in every episode or whatnot. So what should someone like do today? It sounds like they should talk to their tax accountant and strategist. So be like, do I qualify for my specific situation for my business? Should we make that conversion or not?
Right.
Okay.
Right. Exactly. Exactly. And a lot of it, it's really going to come down to your bookkeeping.
Okay.
Because I can't make that determination until I know
That's fair.
what your profit is.
Yeah.
So I need to be able to see your income, your expenses, what is your projected income, what are your recurring expenses that happen every single month, so that then we can kind of get to what your estimated profit is going to be at the end of the year. And then we can start making decisions from there.
Gotcha. So really step one is, do you have financials to actually review? Okay. So making sure that you're good to go with your business financials of like, what is even going on with your business? Okay, cool.
Yeah. Yep. So if you have any questions about an S corporation, whether or not that's right for you, or if it's better to stay as a single member LLC, feel free to put a comment below or send us an email and we can talk through your particular situation.
Bye, guys.
That's a wrap on Let's Get Fiscal.
Ready to stop guessing and start saving? Click the link in the show notes.
Grab your consult and let's make your business work for you.
Not the other way around. You've got this.